you're an insurance agent, everything you know about the industry is about to change. And if you stay until the end of this video, you're going to learn about the biggest threats facing your agency and how you can truly save it. The industry is changing rapidly in so many ways. And if you're active online, you've probably seen the industry consolidation, the massive agencies that are now buying out successful agencies in every small town, and 70% of all insurance premium in the US is now managed by the top 10 agencies. You've also probably seen AI, and everyone is now using ChatGPT, Claude, various other tools. You've likely seen everybody talk about OpenClaw and the never-ending exposures that come from it. Then we've also got the large carriers. Now they're starting to implement AI, and we've got the large agencies that are bringing it in and cutting down their workforce numbers. There's so many massive changes that are coming into the industry. On top of that, now we've got the new insurtechs that are popping up. They say they want to disrupt the industry. They're selling to clients direct and online. And even some carriers are ramping up internal call centers so that they can sell directly to your clients. Everything feels like it's against the independent agency model, and especially on the personal line side. Obviously, all of these are really big problems, but it's all higher level to a truly deeper level issue. And I believe if you fix the root problem, you can still save your agency. The true problem facing most insurance agents is a relationship problem. Insurance has become a commodity and transactional. And I know what you're going to say, Tyler, no, that's not the case. Like, I'm besties with my clients. They love me. And yeah, that may be true. Your clients may love you. You may be the outlier out of all 38,000 independent and captive agencies in America. You're the one that truly creates relationships. And if so, good for you. But I know after working with over 700 agencies around the country, as you scale, those relationships do not go deeper. Like, you may have the deep relationships with your first clients, obviously with friends and family that are insured with you. But as you run and grow, I've seen how problems keep coming up, and I see this time and time again. I can't tell you how many times I've had an agent call me completely pissed because they had a client that they just saved their tail last year on a claim, and now they just called them this morning and they switched to another agent across town because their car insurance premium went up by $10 a month. Newsflash here for you. If you think that's a great relationship, and you're not worth $120 a year, your insureds are switching over that, you don't have the relationship that you thought you had. And this is a resounding theme that I am seeing across agencies all over the country. This is the state that we're in, and I am here to help you fix that. In this video, I'm going to show you how to fix the biggest problem facing insurance agencies, and it is something I am calling the Monoline Crisis. I truly believe that the Monoline Crisis is one of the largest issues that independent insurance agencies are currently facing, and we're going to go through defining what the problem is, figuring out the true impact on your agency, and then we're going to talk through how to fix it. So let's get into it. Now, there's some pretty surprising data out in the industry, and there's a lot smarter people than myself that have pulled this data. But after polling agencies inside our Facebook group, Agency Shop Talk, I'm finding that this looks pretty accurate. 61% of agencies, the policies that they have are monoline, meaning that you only have one policy per each client. Now, if you extrapolate this, the numbers come out to roughly a third of all insurance buyers have policies with multiple agencies. So some people have things uninsured or underinsured. They're not properly protecting themselves. So as a fiduciary, you have a job to help round out those accounts just to protect them. But also, you got a 1 in 3 chance that your clients have policies with other agencies. And that's a really big problem. So again, 61% of all policies are monoline, and there's 38,000 agencies all competing for that same business. And the scenario that I've mentioned, let's say that somebody has a price increase and it's $10 a month and they're willing to switch. That means they're probably a monoline account and you don't have the depth of the relationship there. They don't see you as providing value. You're providing one product for them. And that's what we have to fix. So when you think about it, monoline policies are a way lower value relationship. There's one product, there's no engagement, there's really no need to have continued conversation. If you just have their car insurance, it's just, hey, do you still have your car? Has anything changed? Any wrecks, etc.? You can answer that conversation or answer those questions in a conversation really quickly. So it's a weak relationship and it turns into a commodity. You are truly just a price. You're not giving them any value. So there's no need for them to give you any loyalty back. And it's really low friction to be able to switch and go somewhere else. Getting a quote on auto insurance takes no time. And it's really easy to call in, cancel, and then change your billing elsewhere. So there's no surprise that people are really easily switching between agencies and your retention's not where you want it to be. So if you look at the whole gamut of products you can offer, if you're an independent agency, obviously personal lines agents, you think about home and auto, but you need to go find a way to provide life insurance because this is a product that your clients actually want to buy. They probably have it at work. It's probably not proper to what they need. They definitely need umbrella. They've probably got toys. Like, I can't tell you how many times I found people that had no idea that their ring wasn't covered. And so they need a jewelry rider or they need an actual jeweler's mutual policy. Personal articles, floaters. If somebody, like I'm in the South, there's firearms everywhere. Those guns are probably not covered. Like you may have a $1,500 or $2,500 sub limit on your homeowners. Most people are blowing through that. So there's so much exposure out there that your clients are not being protected from. And not to mention, if you get into commercial and small business, that's when premium jumps massively. Now, you need to be an expert here. This is an education problem. You need to make sure that you can provide value to your clients. But again, you need to have all of these accounts. So it's really hard for somebody to leave you. And the numbers don't lie. So here's the retention numbers that we've been able to find. And these are industry averages. So if you have one policy with a client, they are 77% likely to stay with your agency. If you increase that to two policies, it jumps by 10%. On average, it's 87% retention. And if you have three or more policies, it jumps to 94%. So another 7% increase. So the more policies you have with each of these clients, the more likely they are to stay with you. And they're 3 to 5 times less likely to switch if they have multiple policies, meaning 3 or more. And so you getting a client from one policy with your agency to 3 policies with your agency is massively important because 1, it allows you to make more money, but 2, it keeps them longer term. And so it makes the profitability of your agency skyrocket. So that's what we want to talk about now. So if you think back to science class when you were in high school, I mean, this was probably even earlier than that. You learned about inertia. Objects at rest tend to stay at rest. Well, the more friction you create in leaving, the harder it is for somebody to leave. So even if there's an outside force, some kind of really great ad that's telling people they can save money on car insurance, yes, somebody may get excited. And if they just have auto insurance with you, they might jump ship. But if you have their home, their auto, their umbrella, their life insurance, and if you're even helping them with their workers' comp at their business, they are not switching to somebody else because of an ad. They're going to stay with you. And so we want to increase the inertia in the relationship. And so when you add all of these other lines, it makes it so much harder and it creates a moat around you and your agency. So the more things you have, the harder it is to switch. Because let's say somebody wants to switch from your agency. They've got to go get multiple quotes, either from an independent agent or they're going to go to all these different agencies around town. And then underwriters have to review it. If it's an older home, like they might send somebody out to check the property. The homeowner doesn't want to deal with this. Then they've got to coordinate start and end dates on policies. If they've got their homeowners paid through their mortgage, they got to go through escrow and get that canceled and switched over. They got to set up their new billing. There's so many steps. And so there's so much friction in leaving. So we want to make that harder and harder for people to go to the next agency. Another piece that's super important is as you sell more policies to each of these clients, you go from a vendor to an advisor. If you're just selling them one policy, they think of you as the car insurance guy or gal, like you're who helped him with this product. But if you help them with all of their insurance for their family, you're now an advisor. You're almost like a financial advisor or their wealth planner that helps manage their retirement. Like you are protecting all of their assets. Somebody's home is the biggest purchase they're ever going to make. And you have an incredible responsibility to make sure that that home is always protected. So embed yourself into their life. The more that you have policies with these people, the more opportunity you have to make conversations too. Like you can get to know them on a more personal level. Find out about their kids. As their kids grow up and go to college, they're going to send them to you to buy their car insurance or get their renter's policy while they're off at school. So there's so many ways that this becomes more and more valuable to you. But it's aside from the money. Like deeper relationships is a good thing. As humans get more and more online, this is going away and this is going to separate you from everybody else. But another piece is massive saving for your clients. Obviously, we know as agents that we don't have control over the premiums. This is the insurance carrier that sets if they're going to increase rates, decrease rates, and really it's the State Department of Insurance that tells them if they can or can't. But what most clients don't think about is they think that the agent has all the control. So let's say you bring over a client to your agency. They did have one policy. They had their car elsewhere. You bring them over, you bundle it, and now they get a 10 to 25% discount. They now think if it's the same policy but at a lower price, that you are a wizard. You waved a magic wand and you made their insurance costs decrease. They're going to think that you do the best. The way that it goes in their mind, they're like, yeah, this agent makes less money so that they can help me. They think that you're cutting your commissions to help them. And they're going to go tell it all over town. They brag about how much money they saved. They're going to tell everybody that they're friends with and that their family members to come to you, and you become the local hero. And that's how we want you to be positioned. So let's think about it, not in relationships. Let's turn it into a math equation. So LTV is lifetime value. This is how you build a big business. And so if we look at monoline policies, let's say that the average annual commission is $187. I think this is based on $1,500 average annual premium at a 12.5% commission. Obviously, some people are going to be higher or lower based on states, based on carrier contracts, etc. But this is a pretty good baseline for us to go off of. So let's say per policy, you make $187 in annual commission. Let's say your retention is really great at your agency for a monoline policy and you're at 80%. The average lifespan of a monoline client is going to be 5 years. So you multiply those out. The lifetime value of that one client is $935. So when you sign them, you basically made $1,000. Now it takes you 5 years to get that money, but that's how you can view the relationship. If you add a second policy, the annual commission goes to $374. The retention rate increases. And average lifespan increases. So for this LTV number, we took 7 years because we want to be conservative, but that LTV is $2,600. So a pretty solid increase, basically 3x. Now, if we go to 3 policies, you make $561 per year. Your retention goes up to 94% and the average lifespan is 10 years. So you now made $5,600 on that client. So it's 5.6 times more profitable to write that one client with 3 policies as it is to have one client with 1 policy. I know this isn't groundbreaking, but it's not a 1 + 1 = 2. There is a multiplier effect. It gets better and better as you add more policies for each client. And so that is where most people are dropping the ball. If you can go from 1 policy with each client to 3 policies with every one of the clients in your book of business, you're going to increase your lifetime value by 5 to 6x, which makes a massive difference in the value of your book. If you're looking to exit, this is huge. This is going to be a force multiplier for you. We talked about it earlier, the industry consolidation, all of these massive private equity groups coming in and purchasing independent agencies. If you're looking to sell eventually, this is how you sell for a lot more money and get a larger amount up front. But also, this is how you protect yourself and insulate yourself so that you can be profitable long term. And as these PE groups come in and buy these smaller agencies, they expect to lose 20 to 25% of that book of business. Those are all clients now looking for a new home. And when you saved these clients money, those people come to make their home inside your shop. And that's the way to start having more and more success. So a lot of people are instituting a 3 policy rule. So I recommend you make this the standard in your agency. And now keep in mind, I have been in your shoes. I've written business, so I understand if you've got a referral from a loan officer and you're trying to get the homeowners done for closing, it does not necessarily make sense to go round the accounts. Now, your lender may want you to hold off on that and just get the homeowners done. So that is fine, but have a standard that you're going to follow up. And again, these are exceptions, not the rule, but the rule needs to be that you set a standard that you get 3 policies with that client in your first calendar year. Round out the account immediately after issuing the policy. Find ways that you can help add value to this client. You need to track and measure this regularly. If you're using an agency management system, it's easy to pull these reports. If you're not, you need to be on something. Like you need to have a CRM, something that helps you manage your book of business. Please, please, please don't just do this inside a spreadsheet on Excel. Like call me. I will help you set something up. Do not do it that way. So what happens when you do go about fixing the monoline policy? If you round this to 3 accounts, you expand coverage and massively help each client. You increase the inertia and deepen relationships so they're not going to leave you, and you increase your retention. You've got higher lifetime value. So this is going to be massively beneficial to your agency. So what are the steps you can do right now to fix this? As soon as this video ends, I want you to go into your AMS or your CRM, whatever you use the most, and go pull a monoline report. So you can run this by home no auto, auto no home, potentially no umbrella, no life, etc. And you just go start calling these people. Tell them, hey, I think I have a discount that you might qualify for. Do you have 5 minutes to chat? And then have a conversation. Deepen the relationship. Like, don't just talk about work. Ask them some kind of question that is personal to them. Ask them about their family, about their kids. What are they doing this weekend? Pick something in your town that's really cool. Chat about that. Deepen the relationship, and then go in to help them on their insurance. You're not just selling something. You are genuinely helping them. So build a follow-up system around this. You need to set an agency standard that within 30 days, you are following up with these people to round out your accounts. Build it into your workflow, build it in your automations in your CRM so it happens every single time. And if you're not somebody that's good about this, step 3, get help executing at scale. Feel free to reach out to myself. Go to scalemyops.com, fill out a form, reach out to my team. We would love to help you do this exact thing inside of your agency, because this is what we do day in and day out. We can help you build a system that helps round out all of your book of business. We can do this on autopilot. So we will work with you. We will identify the opportunities inside your book. We will have AI research these people so that you have conversation pieces. And then we'll give you the scripts and frameworks so that you can reach out and close more business. This is completely on autopilot. We will give you tasks, and all you have to do is check it off one by one and collect checks. Like, that's it. And then if you need help writing the business, like actually going in and quoting, I have trained virtual assistants. They know how to work inside your carriers, inside your management system, inside your rater, so they can take the data intake that you receive, complete it in all the carriers, get finalized quotes, and give it to you to go sell. I want to make it as easy as possible for you to go make more money. And truly, I'm not trying to just be clickbaity in this title, but I truly believe that your agency and the future of your business depends on this. The industry is changing so quickly. And yes, AI is coming. AI is coming for tons of jobs, specifically white collar jobs. Like, as the carriers continue to implement more and more technology, they're going to have more ways to remove independent agents. So the only separator for you is your relationship with the client. And if you build the relationship, all the big PE firms that are coming in can't buy that away. And all of the carriers trying to cut out agents can't replicate that. That is your differentiator. That is your moat. And that is how you protect your agency, your family, and all of your clients. So the more you embed yourself into their lives, the harder it is to remove you. So if you're ready to save your agency, again, click the link below, reach out to my team. We would love the chance to get to work with you, help you grow your agency. If you have any questions, leave a comment down below. Myself or my team, we monitor this. Now, we don't respond as quickly to YouTube comments as we do to an email. So if you want to email us, that's probably the quickest way, but I will happily help you. I believe in the independent agent channel. I want to help you succeed. So reach out to my team. Even if you don't work with us, I will try to add value in any way that I can, and we will see you in the next video. Thanks.